Okay, and we are live. I think. Oh, I'm sorry. I think I've been live for a while. Hope everybody's doing very well. This is Travis from EAR Live. This is the first time that we're going to end up going through and doing a live stream. Being able to take a look at what's happening with the market, being able to take a look at it from a fully automated trading perspective, from a live trading perspective for manual trades and everything else like that. Typically, what I would love to be able to do is be able to get this started right before 8:30, and then after that, be able to trade through the Forex session. Then after that, the NC session, being able to get everybody to be able to obviously trade at the same time. But let me go ahead and go through a disclaimer real quick. And then after that, we'll go ahead and get into some tradable pairs. What I'm going to end up doing is taking a look at Forex pairs. We'll take a look at index pairs, obviously, because it's 950. So the indexes are moving a little bit more. Stocks, crypto. If there's any people that are watching live on this one, you can be able to chime in and be able to place your information or place a pair on the chat so we can be able to take a look at it and then after that go through it. But let's go ahead and go through the disclaimer. I'm not a CTA or CPA, so I'm not going to tell you whether to buy or to sell. What I'm going to do is teach you education. From the education, you can be able to make your own informed decision. Understand that trading involves risk. It involves risk of being able to make money. Also involves the risk of being able to lose money. So please keep that in mind. And understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it's not promised that you're going to end up making money today. So as we end up going through and take a look at this, the way that I end up taking a look at trades is by three different ways. The first thing is that I truly like to only trade trending markets only, um, especially from a manual trading standpoint. I love to be able to know what the direction is actually going to end up being, and then from being able to get that direction, then after that you can be able to make a trade. In order to be able to do that, you have to have time frame alignment. The way that I describe time frame alignment is by being able to see the weekly and the daily trade on the same in the same direction. So if the weekly showing bullish signs and the daily showing bullish signs, then we have an opportunity to be able to get into the market. But we have to be able to go through the next steps to ensure that it's going to end up being a quality trade. The next one is going to end up being overbought and oversold stochastics in the same direction of the time frame alignment. And then after that, anytime that you end up taking a trade, you always have to be able to have a catalyst. That catalyst to me means that you have a counter trend line break and some type of economic news that may end up happening to be able to help you out. And anytime that you end up taking a trade, you always want to make sure that you end up having good equity management. In order to be able to have good equity management, typically what I end up doing from a manual standpoint is that I end up having different things that I end up putting in place to be able to ensure that I have a risk reward factor of 1 to 2.3. And I'm going to end up showing everybody that as we go through. This stream is going to end up being somewhat short this time. And then after that, obviously, as we go through and trade together, actually, right when the market is actually making its complete move, then after that, we'll be able to see it a little bit more. So I'm going to start off with taking a look at what's happening with the economic calendar. I typically take a look at it from fxstreet.com. As I end up going through and taking a look at this, I end up kind of classifying trading days into two different ones. There's a trader's day, and then after that, there's a news day. A news day is where you're going to end up having high impact news that will end up affecting the market throughout the overall day. And then after that, a trader's day is where you don't necessarily have so much high impact news that will affect the market. So you can be able to trade without necessarily understanding that there could be some type of high impact move that may end up happening. As that is loading up, I'm going to go ahead and take a look at the United States dollar index. I always start off with taking a look at the United States dollar index. We take a look at oil. We take a look at gold. The reason why we do that is because it allows us to be able to get understanding about what's going to happen with the U.S. dollar pairs, the Canadian dollar pairs, and what's happening with the Japanese yen. Now, as I'm going through this in the background, what I'm going to be end up taking a look at is my automation systems as well. If you end up taking a look at this, this is the Holeshot EA. For the people that have been watching expert advisor reviews, you've seen that this was one of the latest reviews that we end up having, one of the latest postings that we end up having for us expert advisors. It is a um, expert advisor that looks for the tops and the bottoms of markets, being able to find those and being able to exploit the market, trading in whatever trading style that you want to be able to do, whether it's you're a swing trader, scalper, or you're a mix of both or a hybrid. So if you're interested in being able to learn a little bit more, I'll place the links, or there's links inside of the description when it comes down to these, where you can be able to take a look at those and be able to understand how that system actually works as we end up going through it. But let's get into it. United States dollar index, we'll take a look at this from a weekly perspective first, and then after that, we get into a daily, and then after that, we can move from there. Currently, right now, United States dollar index, this long term since 2021, has been showing signs of bullish movement. It has been honoring this overall trend line right here. And as long as this market does not break this trend line to the downside, then I will consider this market to be bullish when it comes down to being able to get into trades and being able to take necessary moves to be able to get into the market. Now, over the course of the last, I'm going to erase this. This is from yesterday's stream. Over the course of the last 4 weeks, the market has broken the counter trend line break, and then after that, started moving up to the upside. It's suspected that the market will continue to keep on moving bullish. But from a weekly perspective, we know that the market is bullish, so it gives us the opportunity to know that if we end up getting the same movement from a daily perspective, then we have a better opportunity of being able to make some money off of it. Now, if you look at it from a daily perspective, the market, yesterday, the market ended up showing bearish movement, and then after that, today, the market is currently showing bearish movement as well. So that means that even though the trend overall from the weekly is bullish and the trend overall from the daily is has shown to be bullish, we see that obviously the market is starting to make a little bit of U-turn. So trading United States dollar pairs and being able to understand what the direction is going to end up being, it's kind of going to end up being hard. You probably might end up seeing some indecision in the markets between the Australian United States dollar, U.S. United States dollar, pound, or anything else like that, because they truly don't have any direction. And I can see that on my automation systems as the systems are actually trading right now. You can see that we have consolidation right here, consolidation right there, consolidation right there for the pound. And obviously, if I end up clicking on Euro United States, you end up seeing that there's some consolidation right there as well. So if you're a person that's looking at being able to trade this from a trending perspective, I would probably sit back on my hands and just kind of wait. But we're going to the 2 hour, even though we don't have time frame alignment, if we're looking for a trade, we know that the weekly is bullish. We know that the daily is bullish. So I'll sit up there and lean to being able to trade to the upside. In going through this, I'm taking a look at it from a 2 hour perspective. We go to this fractal low. And if you've ever been on smarttrader.com, in which I'm going to place this inside of the chat box so people can be able to have it for themselves and kind of be able to work along with me when it comes down to that. If you end up doing that, there's this thing called Smart Fibs. You can be able to click onto the fractal low of a candlestick, and what will happen is that the fibs will automatically end up being placed on for you, so you can be able to know exactly where the market's going to be. So yesterday in one of my live streams, what we ended up saying was we were looking at this from a short-term perspective move, because we do have time frame alignment. I mean, we do have time frame alignment, but currently right now the market's not necessarily ready to be able to trade. So we're just waiting for the market to be able to fall down into a sweet spot area. Typically, the sweet spot area that I would like to be able to get in from a Fibonacci perspective is the 618, 786, and 86. As long as this market keeps on falling down and giving us great value, then I think we'll be good. Currently, right now, if we look at it towards the left, I expected that the market was going to end up falling down to 12,990 yesterday. Currently, right now, the market is right here and it's kind of reacting. If you look at it, this is past resistance, which has turned into a future support if this market does hold. And I think that's the reason why we're starting to see a little bit of consolidation, because we go based off of history. We can be able to see that this market has shown that this could be an area of U-turns. So if the market does continue to keep on going at this rate and break a counter trend line break to the upside and start to be able to move, then the expected take profit on for this one will be 13,125. If we're talking about from a risk reward standpoint, you'll have a 1-to-1 when it comes down to that move. So if you really want to get into this, I would wait for the market to be able to have a full U-turn first for a counter trend line break, and then after that, be able to place my stop loss a little bit more aggressive, so you can be able to get a better risk to reward when it comes down to this. But we do have reasons to think that the market could be able to move up to the upside. But currently right now, until it actually breaks a counter trend line break and closes above this counter trend line break, I'm not interested in being able to make a move off of this one yet. But just to give an idea about what I would do, let's say if this market ends up breaking above this counter trend line break, my stop loss will end up being below the swing low of this take profit will end up being up here at 13,125. So this would be your stop loss. This would be your take profit. This will end up being your stop loss. Currently, right now, I'm not in a trade off of this one, so I'm not necessarily going to give the full numbers, but that would be ideal if we end up getting that. Okay, let's go ahead and take a look at oil. U.S. oil has a huge correlation with the Canadian dollar. If we take a look at it, that's a large spike. I didn't see that one happening. Um, from a weekly perspective, this market was in consolidation for a very long time early in 2023, where the resistance was at 82.50 and the support was at 63.62. Since then, the market ended up pushing up to 94, which was a area where it ended up struggling to be able to break out of one time before. And since then, the market has moved to the middle of the consolidation area that was established from the early portions of November 2022 all the way up to August of last year. So, with that being said, because it's in a middle of a consolidation area, I'm not going to be interested in being able to do anything with oil, so I'm not going to talk about it when it comes down to trading. So, we're just going to move forward for that one. For my people that like being able to trade gold, we take a look at this. We end up having a trade off of this one a couple days ago, based off of a wedge that we end up seeing. If you take a look at this, we end up having a purple line right here, purple line right there. Basically, end up showing that this market was creating support and resistance inside of this overall area. Currently, right now, if we take a look at it from a daily perspective, we see that the market end up breaking out of this area and pushing up to one of the previous points where the market end up touching. Where the market ended up touching this counter trend line break, which was at 2060. Currently, right now, as we end up taking a look at it, the market has broken a counter trend line break to the upside, which is showing that gold may end up being stronger when it comes down to a push to the upside. Yesterday, I ended up telling everybody you had an opportunity to be able to take a counter trend line break trade. I would be interested in being able to do that with being able to have the stop loss below 2,000. Below 2,000, excuse me, with the take profit being at 2060, which was the previous resistance points where the market ended up hitting from here. And currently, right now, if we take a look at it, we're seeing that we're getting that same type of movement currently right now. So if you are interested in being able to make a move off of this one, I would be interested in being able to take a trade off of gold with the, I'm just saying this as if I'm not in it yet. We have a broken counter trend line break. If we take a look at this based off of the 15-minute, we have a breakout. We have a retest of this move that ended up happening right now, and then after that, we end up having a movement from here. More than likely, what you're probably going to end up seeing when I put in the stochastic, just to be able to take a look at what's happening with the market, we'll see that the market is probably a little bit overbought. Yeah, there it is right there. We can see that the market is a little bit overbought. So that gives you a little bit more opportunity to be able to kind of wait and see how the market's going to end up moving off of this one. So what I'm going to end up doing is that if you have not got in, obviously I'm talking as if we end up having a stream yesterday, but I end up doing that on a different page. But if we take a look at this movement, I would wait for the market to be able to get back inside of the buy zone and give a better opportunity to be able to get a better opportunity to be able to get in and get more value. I would still end up having my stop loss either below 2,000, or what you can be able to do is go to the previous swing low. The previous swing low that we end up having is right here. Take a look at that. The lowest price was 2022. You want to go if you want to place your stop loss at 2021 with a take profit of 2060, you will still get great value even at this point of being able to get in. But the more that the market kind of retraces and gives you a better chance of being able to see if this market is going to hold this, being able to hold this trend line, then you have a better chance of being able to make something off of it. So just keep that in mind. All right, that's gold. Gold, I am bullish. I'm way more bullish now because I know that obviously you taking a look at the United States dollar index. It has been in a situation to where it's showing that it's consolidated, and it's looking like the United States dollar is going to end up being short-term weak after being strong from the news that we end up having with non-farm payroll and everything else like that. Going into what's happening for the rest of today, we really don't have any high impact news that's going to end up affecting the market. Aside from the New Zealand dollar, you're going to end up having inflation that will end up happening, or inflation expectations that will end up happening. We take a look at what's happening on on Thursday. There's really nothing that's going to end up affecting the market as well. So whatever technical style of trading that you end up doing to be able to figure out what your position is going to end up being will probably end up holding up. So in this case, we got a broken counter trend line break. The market was not in the buy zone. I would love to be able to get in the buy zone. And we have, we take a look at the weekly and the daily time frame alignment. We know that the market is somewhat bullish. So you got an opportunity to be able to trade it based off of this breakout, and the market is holding this as support. I would look at being able to personally look for a buying opportunity. All right, now done with that, let's take a look at US 30. For US 30, what I'm going to do is I'm going to look at this from trading view. And then after that, we'll go from there. Let's see. US 30. So US 30 from a weekly perspective. US 30 from a weekly perspective, this market is getting close to being able to complete a weekly D extension, or just a weekly Fibonacci ABCD completion. That movement ended up starting off in October of 2022, and currently right now we're getting close to being able to finish that out. I'm going to show what that ABCD looks like. If you're not familiar with ABCD patterns, what I can be able to do is that in the description I can be able to place in a couple of videos that will end up helping you out for being able to understand that with Fibonacci. So here goes your A, here goes your B. The market ends up retracing down to C, or retracing down to the 5-0 retracement, which means that the market will go green to green, which means that the D extension will be all the way up to the 1.618 off of this move. Currently, right now, the D extension is at 38,850, and the current market that we're at currently is at 38,612. The expectation is that the market will end up being bullish, and I will look for bullish opportunities, but I will only look for scalping opportunities to be able to get in. A few days ago, the market was in consolidation. From that consolidation, it ended up breaking out, and then after that, retesting this overall move to the upside, and then from there, the market has pushed up. Currently, as I look at it, the market ended up having a bearish engulfing candlestick, or somewhat of a bearish engulfing candlestick 2 days ago. That has to be broken from a high point in order for me to be able to fully be comfortable being able to take this trade. I would look at this more as a breakout trade on the 15-minute or on the hour. And once that breakout ends up happening above at least the bar of this candlestick, then after that, I will look at being able to get in. So there goes my yellow line. I'm showing that for a reason. If we go into the 1 hour and take a look at this, we'll probably end up seeing some type of consolidation, in which there it is right there. I know that we end up having this high that end up pushing up all the way up to 37,774. And then after that, quickly started to reject. We have a little bit of support that is right here. I still go back to what I end up saying. If you're looking at being able to buy this bullish, it will end up being only a scalping opportunity to be able to get into. The question is it really worth being able to spend your money on something that has a lower probability of being able to get lower probability of being able to it has a high probability of being able to finish, but the risk reward will probably not necessarily be there. We take this, it end up being 191 points. You do that, your stop loss will end up having to be below the swing low off of this one. Currently, right now, if I'm looking at this, I don't like the risk reward, because I would place my stop loss below there. Yeah, it'd be 186 for 191. It doesn't make any sense to be able to do it. So I'm gonna stay away from US 30. US 30, I'm gonna let it finish, and then after that, wait for a retracement. Nas 100. Took a look at this yesterday. I was looking at being able to get in for a sale. When we took a look at this yesterday, the idea was that we seen that the market started to be able to break, and it was looking like it was breaking this support. Once we end up getting a counter trend line break to the downside, for the people that did not get in, I end up saying wait for a counter trend line break, U-turn. We end up getting a slight move of that, but then after that, the market U-turned again to the upside. I'm glad I didn't take a trade off of this one because that counter trend line break was not broken to the upside. And with this breaking these two double tops that we end up seeing from this resistance, the market has a little bit more movement to the upside to be able to complete a long-term move, which will end up going up to 18,750. 18,750. The way that I end up getting that was that we go back to the daily and take a look at our Fibonacci's to be able to figure out where the market is going to ultimately go. The market ended up retracing to the 23.6, and since then, with the market retracing to that area, green goes to green, meaning that we expect that we're going to end up getting out of the market at 18,750. Now, because the market did not have a great retracement off of this one, did not retrace down to the 382, it means that the market is not necessarily considered to be healthy. So typically what ends up happening, 80% of the time that typically ends up happening, you end up having a little bit more resistance right around the 382 or the 127. In this case, it'll be right around 18,070. So I do expect that if this market continues to keep on pushing, it will get up to 18,270. I'm sorry, 18,070, which is about 400 points away. The stop loss on this one, if you're looking at being able to do this bullish, will end up giving you a better opportunity of being able to get more value. Looking at switching this up and going bullish, then the thought process would end up being stop loss will be stop loss will end up being below the swing lows. As this market is breaking out, if you have not got in, I would not look at chasing it. I will wait for the market to be able to come back. If it comes back, you have an opportunity of being able to get in. It will look like this: push up to the upside, retrace, turn past resistance into a future support, and then after that, look at being able to buy up to that position from there. So I'm not looking at jumping in right now. I will look at being able to jump in a little bit later on today once the market ends up giving you a U-turn. Currently, right now, the last 1, 2, 3, 4, 5, 6, 7, 8. The last 6 out of 8 candles have been bullish. So that means that the last 8 hours technically has been bullish. There will be some type of retracement that will end up happening. And then after that, once you get that counter trend line break to be able to push from there, look at being able to get in bullish from there. Okay, cool. So that is NAS 100. And currently right now, if we take a look at the automation systems, just trying to figure out what's happening with those. This page has been dedicated to being able to show some of the best expert advisors on the market and being able to see those fully automated. What I'm going to end up doing is that from the automation systems that we end up reviewing throughout the overall week, we will end up placing them show them doing a live stream as well, whether if it's a demo account or a live account, to be able to show you what the performance is of those. The ones that I have being featured right now, the ones that are basically being shown right now, is the Holeshot EA, which is one of our newer EAs that ended up coming out 2 weeks ago. Currently right now is up 13% as we speak. That's in 2 weeks. And being able to go from there. If you're interested in being able to get a little bit more information about that, you can be able to go and take a look at the signals or being able to take a look at the page where a Holeshot is and be able to understand and be able to try it out for yourself. There's a free demo that you can be able to click on and be able to try it out for your own testing. Currently right now, there's no active trades today. I'm actually happy that there's no active trades today. The way that this system ends up trading is that once the market ends up retracing down to these green areas or to these red areas, and if they end up closing above or closing below, and then after that returning back inside of that area, then after that a trade will end up being taken, and then based off of whatever your risk behavior is and the way that you end up trading, then it will either scalp or you can be able to swing trade it or you can be able to hybrid it. But the system ends up trading and being able to win at a range of 70% to 90%, depending on your trading style that you end up having. Now, with this being said, this is the first EAR live that we have done, and I do expect to be able to do more. And then after that, we'll probably be a little bit more professional of how we end up getting this done. But if you're interested in being able to learn a little bit more, being able to support, please make sure that you end up clicking on that like button, share it, and I'll see each and every one of y'all tomorrow in the next video that we end up having.